Good evening, everyone. And once again, thank you so much for joining in and being a part of the wonderful family, CGPI. So we'll just have to wait for another 3 to 4 minutes for other members to kindly join in. And I would once again like to really thank all of you for joining in.
Ishan Bhai has not yet joined. I just called him.
So good evening, everyone. Thank you once again for joining in. And we're just waiting for some of the other members to join in. So we'll be waiting for another 2 minutes, post which will be, a part of today's wonderful session by Nitin sir on clause 44, which is on the basis of the request that we received from the members. So thank you once again for suggesting such topics and also for joining in today. Good evening, everyone. Thank you for joining in. We'll start the meeting in about 1 minute. And while we start, before we start, I would just like to share, I would request everyone to kindly keep on the mute mode so that the speaker is not distracted from his deliberation. And regarding the questions which you may have during the course of the deliberation, it would be really wonderful if you could put in the questions in the chat box, okay, so that we can take them one by one at the end of the session that we're having. So that will help the speaker to maintain the flow, as well as it will also give us an opportunity to be a part of the questions that you're addressing, so that they can be shared with the others also, so that will be helpful to them also.
Ishan Bhai has joined. I'll just add him.
Yeah.
And I'll make him the co-host.
And it's really lovely and wonderful to see that people from across India, I can see people from North India, South India, Western part of India, Eastern part of India joining in, which really shows that the issue is really a burning issue as on date. So it's really wonderful experience. So good evening, everyone. At the outset, I would heartily welcome each one of you to the first session on burning issues that CGPI has taken up. And what is the background of CGPI, though I would not need to say in detail, but for the sake of the larger audience that we have, as we have many new friends joining in today, I would like to share that CGPI is a national level body, which is not only thinking about making representations to the appropriate forum, but is also quite keenly engaged in sharing about topics of interest on GST. So from time to time, we have intensive study sessions wherein we discuss details about the sections in GST. Apart from that, we also have the good fortune of many of our well-known faculties and learned advocates and chartered accountants who happen to come to CGPI to share their treasure of knowledge with all of us. So CGPI also helps us in enhancing our knowledge, which helps us to use that in our day-to-day practice from time to time. So, and key question that we have got from some of the members is that so why is this session named as, or the series named as, burning issues in GST and burning issues in general? The thing is that, as we have seen, that we have been witness to a series of circulars and notifications. Okay, so whether there are changes in the 3B, okay, whether they are the clause 44 in Form 3CD, which has been mandated for this year, made mandatory, or whether it is the circular issued on liquidated damages, or it is the circular which says what will happen to the ice cream parlors. So there have been series of changes and clarifications and amendments that have been happening, which is actually creating a lot of doubts, queries, or confusions in the minds of the professionals and industry at large. So for that, we, the committee members of CGPI, have thought that we'll put all these questions to rest by having a series on it, wherein we'll be trying to deliberate on one topic or the other from time to time. So today, we are having our first session, because this is a session which was requested by many members, and this is on clause 44 of Form 3CD, the tax audit report, the disclosures, the queries, and what we need to do as reconciliation and what needs to be shown. And so, without taking any further time, I'd quickly go to Ishanji, who is going to introduce another wonderful news to all of us, the CGPI family, about how CGPI is planning and going to have its first residential refresher course on GST. So over to Ishanji. Ishanji, you're on mute. Yeah.
Can someone put that flyer also on this one? Good evening, everyone. Today is our first session in this burning issues series. As Arup said, the idea is that we should take niche topics, recent topics which are creating a lot of issues, recent problems, etc., and then do a threadbare analysis. CGPI, we don't do hodgepodge analysis. We always take small topics, niche topics, and then go threadbare into it. Bal ki khal nikalna hamara specialty hai. So that is why on clause 44, and all of you already know Nitin Bhai is a master on all these topics. One of his previous sessions on the GST audit was a blockbuster. People still ask me for his video. That video बीच में गायब हो गया था, हम अभी ला रहे हैं उसको वापस. So I hope all of you enjoy this. Now our CGPI has from day one always been virtual, because we thought, even before COVID, we thought it doesn't make sense to always have physical sessions, etc. That virtual is better. Now COVID has reinforced the thinking that virtual is better than physical. That being so, we thought that I had gone in some recent RRC of some other association. A lot of our members met us and said that, Ishan bhai, at least one RRC we should do every year. So then we took a call that every year, one session, that is one RRC, will be physical, where all of us can meet each other. Because ultimately that is also necessary. I know Nitin bhai, I know some 10, 12 people whom I have seen. A lot of people, a lot of members may have interacted with me on message, etc. I am the person who hounds you for fees, keeps sending you messages on events, etc. But we have never met. We have never met any of these people. Many senior faculties who are part of CGPI, you may never have met them. So we thought that at least one session, one seminar throughout the year will be physical, which is the residential refresher course, from this year onwards, and all other seminars will be virtual. So I hope all of you can join us. As I said, more than knowledge, it's really a family event for all of us, because the CGPI family is now almost 3 years old, but none of us have seen each other. So we also want to meet all of you. I'm sure you also want to meet us. You want to meet the other members of this family. On 4th to 6th November, we have this CGPI RRC, first RRC in Pune. We have some very good speakers and very good topics for all of us. And I hope that all of you can join us. Do make it, because this is a milestone for all of us. It is the first RRC. Therefore, please try to join. And I hope to see all of you there. Okay, now I think we are delaying the session. I have overshot my time. I'll hand it over back to Arup to conduct the session further. Thank you.
Thank you so much. Thank you, Ishanti. And I think, as Ishanti was sharing, it's more of family bonding and a reunion that we're going to have, apart from the technical sessions, which I'm sure you're going to enjoy, and you're going to take back. We all are going to take back something, when we are returning from the RRC. So, with this words in mind, I would now have the wonderful opportunity of.
एक minute. Arey Arup, a lot of people are complaining here that they are not getting admitted. Yeah. Just see what is happening.
No, I'll tell Rinav, please share on it, the YouTube link on the WhatsApp group.
Yes, I have shared the YouTube link because we have crossed 100 participants.
So others cannot get admitted?
No, they will have to join on
the
YouTube.
link.
Okay, YouTube ची link पाठवतो.
I have sent.
Yeah, so while on this, so since the number is limited to 100, so post this, if anybody is trying to reach out or we connect, maybe your friends or colleagues, you can request them to join the YouTube link, which is being shared on the WhatsApp group. So with this, I'll quickly go to Rinav ji, who will introduce our speaker for today's session.
Thank you, Arup ji. For the formal task of introducing CA Nitin Bhuta. Firstly, he is our honorary treasurer of the CGPI. We all know that. Academically, he is a graduate from Mulund College of Commerce at Mulund. He is a chartered accountant, we all know, and he is a cost accountant as well. A good achievement was that he cleared his chartered accountancy exam 16 days before completion of his articleship training in 1992. He also secured a 13th rank at all India level at the intermediate examination of ICAI. He is the proprietor of Nitin Bhuta and Company Chartered Accountants based in Mumbai. He is a regular speaker at WIRC, Mason, at various GST certification courses, as well as at various study circles in Mumbai and outside Mumbai on GST. He is one of the panelists on WIRC for resolving the queries on GSTR 9 and 9C. Sir Nitin Bhuta is also one of the contributors to pen articles in publications that have been published by ICAI on appeals before CIT Part 1 and FAQs on appeals before CIT Part 2. Besides that, he regularly publishes his articles on Tax Guru and various other professional websites and elite professional journals like GSTPM Journal and so on. Among his industry exposure during his training as well as after he established his practice, he has had the privilege of getting exposure to various industries like advertising, entertainment industry, research company, pharma industry, manufacturing industries. You name the industry and he has an personal work experience in that industry. Among the present activities that he is being currently involved in, he is actively involved with limited scale of doing audits, direct and indirect taxation, management advisory, as well as handling litigation of matters of corporate as well as non-corporate. He is also actively involved in vetting out of drafted legal documents pertaining to business arrangements from the tax compliance perspective. With his among his personal interests, he enjoys traveling and reading a lot. He has traveled almost in all parts of India, and in abroad he has visited USA, Thailand, UAE, Malaysia, Singapore, as well as the Caribbean islands. With this brief introduction, I'm sure the number of participants that have been joining in and have been asking to join the session. We are all eager to hear from Nitin bhai today. So over to you, Nitin sir. You can just start the session and just present your views before everyone.
Good evening, friends. Let me tell you very honestly, when I was approached to take this particular session, I was a little nervous. The reason being, CGPI is my baby, and we had conceptualized this idea of starting the CGPI for the benefit of all to discuss the niche aspects of the indirect taxation. But today what we are going to discuss is on the income tax front. The compliance is required for the income tax, but which has got interplay with the indirect tax per se. So what I'm going to try is in my presentation, I have tried to analyze the implication of clause 44 reporting, which is popularly known as the GST reporting in the tax audit report, to whom it applies, when it applies, and I have a host of questions myself, which I will be raising during the questions. In fact, if it was an interactive sessions, I would have asked each question to each of the participants, and then it would have been a treat to understand the implications of such a changes that are required to be reported. With this brief, let me start my presentation. But before I start my presentation, let me tell you, my format of the presentation is that I will establish the foundation first. And once the foundation is established, I will go to the actual aspects of the GST reporting required. Am I audible enough?
Yes,
Perfect, sir. Perfect.
Very audible. Very
Perfect.
audible. Yes.
1 second. Is this screen visible perfectly?
Yes, sir.
Fair enough. So what we are going to discuss is the clause 44 reporting in tax audit. And typically, all these speakers put their disclaimer in the end, but I am the person who will put the disclaimer in the beginning. Whatever I will express, they are my personal views. I may be correct, I may be incorrect. Whatever I express, it is not binding on CGPI. It is not binding on the ICI. I'm the member of ICI. I would urge every member to read the law before accepting anything at a face value. And during my deliberations, if I give any examples which are similar to your client's examples, then please note I have no intention to disclose anyone's affairs in a public domain in general. Before we start, there are lots of questions which I have been observing in the public domain. Will clause 44 reporting would be deferred once again? If we put the disclaimer in the tax audit report in form number 3CA, which is for the corporates, or a 3CB for the non-corporates, would it help? But here one more angle which I would like to introduce to everybody. If I look at clause 44 reporting, in future, in view of doing away of the GST audit in the form of a reconciliation statement which we were filing, is it act as a authentication as well as a validation by a chartered accountant? Or is such reporting beneficial to all the stakeholders in general? I have started with the food for thought, and I will conclude my session also with the food for thought. But let us now examine every aspect of GSTR reporting in clause 44. First and foremost question, which everybody has: do I need to be expert in indirect tax when I'm reporting such information in clause 44 details? My personal view in this, if you are an expert in indirect tax, it will definitely help everybody. Your clients, it will help you, it will help your members. But say you are not an expert on the indirect tax. You have a reasonable knowledge of indirect tax, then also it would suffice. Or you are only expert in direct tax. Will it create any prima facie issue? In my opinion, what I understand and what is my view, which I am going to express in the subsequent slides, whether you are an expert, it will help. If you have a reasonable knowledge, then also it will help. But if you are an expert on the direct tax, in that case also, if you maintain some kind of checks and balances, it will really, you'll be really in a position to report such a details very smoothly, provided information is correctly compiled and reported. This clause 44 is not going to be deferred at all. Let me tell you very honestly, there are no chances of any deferral at all. So everybody has to keep in mind that this is mandatory reporting to the applicable people only to whom tax audit filing is applicable. If tax audit filing is not applicable, then clause 44 doesn't apply at all. But then next question comes, who is celebrating such an angle of reporting? Are taxpayer enjoying? Are advisor enjoying? Or are taxmen are going to enjoy? Or councils? According to me, if documentation is well maintained by the taxpayer, or system data is captured properly, then all the people will enjoy. But if it is not maintained, which is a normal case in most of the taxpayers' affairs, in that case, taxmen would enjoy it more, followed by the councils. Advisors, if they are providing the services on a professional basis, they will enjoy. And taxpayers will enjoy only if they are ready with the data. Let me tell you very honestly, this data compilation has to be done by the taxpayers. It is not to be done by the auditor at all. So first, prima facie responsibility is of the taxpayer. But typically what we have observed, taxpayers are dependent on the advisors who may be their auditors who may be their external advisors, to do such a compliance. So the role of a person acting as an auditor or as an advisor becomes very, very significant and important in general. And as a professional, when we are providing such a services to our clients, we need to give the best of our services so that it helps the client, it helps the taxman, and it helps the counsel also if any litigation arises in future. So in my personal opinion, in this year, all of us will have a difficult time in compiling such a information. But once we are used to compiling such a information, next year will be cakewalk for everyone. We will not face that kind of a stress at all, because everybody was under the general impression that again it will get extended further. But this reporting is like an uninvited guest. And once it is anybody is an uninvited guest, we know how to handle such a person. We have to handle it very, very discreetly so that it serves our purpose, and at the same time, we do our compliances in a perfect manner. Let us understand to whom it is applicable first, so that our discussion will become focused. The people who are filing their income tax returns under the provisions of Income Tax Act 1961 under the head of income, profits and gains of business or profession, to whom tax audit is applicable under section 44AB, where the turnover exceeds 1 crore, which has been now increased to 10 crore, subject to certain terms and conditions. And it is applicable from the assessment year 22-23. But here then the next question that is coming to our mind, if I am following the presumptive schemes of taxation, which is 44AD, which is typically a trading activity where my turnover is less than 2 crore, and I am offering minimum percentage of profits, which is prescribed under that particular section at 8% for normal business transactions and 6% which are done through banking channels or through latest means of GPay or RTGS, NEFT or whatever, then the minimum percentage of profit to be offered to tax is 6%. If I am offering profit to tax, which is less than the prescribed percentages, then I need to do the tax audit under section 44AB. One thing which I would like to tell very clear to all the participants, once you opt for section 44AD option, then you can't exit. If you exit, then you can't come back into the presumptive schemes of taxation at all. The next type of presumptive scheme of taxation is 44ADA, which is essentially for the professionals whose gross earnings is less than 50 lakh rupees. And they are expected to show minimum profit of 50% as the taxable profit under section 28 of the Income Tax Act. And section 44AE is for the vehicles, where the number of vehicles owned by the person is less than 10. So typically, when the percentage prescribed under the respective presumptive schemes are not offered to tax, then it is a compulsory tax audit. And tax audit for a corporate is in typically form number 3CA, and non-corporate is form number 3CB. And for both the forms, there is one form which is common, which is known as a Form 3CD. And under Form 3CD, there is a clause 44, where such reporting is required to be done. And this reporting is required to be done for almost all the cases for which you are filing the tax audit report on or after 1st April 22. For example, our Rinabai has not filed his tax audit report because he is busy doing his business. And he has not filed tax audit report for assessment year 18-19, 19-20, 20-21, and 21-22. And he approaches, say, our Arup Bhai to do the tax audit. So Arup Bhai, when he files the tax audit report, he is required to report clause 44 for the assessment year 18-19, 19-20, 20-21, and 21-22. It is mandatory. There is no option left. He can't say okay, for that particular years, this clause 44 reporting was deferred. It was deferred only up to 31st March 2022. But now, since if you are filing the tax audit report from 1st April 22, you will report clause 44 as tax audit reports are uploaded today. Penalties for late filing of the tax audit report, that is a different discussion altogether. That is not the part of the discussion today. Now take another example. Arup Bhai has filed his tax audit report for assessment year 21-22. But on account of some reason, he has to revise the tax audit report. So for such revised tax audit report, is he required to report clause 44? The answer is yes. In revised tax audit report, he is required to report clause 44. So this is what we got to keep in mind. If I'm filing tax audit report after 1st April 2022, clause 44 is mandatory. There are a lot of people who ask me, do I need to generate separate UDIN for clause 44 reporting? My answer is no. There is only one UDIN to be generated for the original tax audit report or the revised tax audit report. And that is to be mapped with the income tax system. So this has got to be, this is the broad foundation of to whom it applies. Let's look at the next aspects. Here is this foundation which I want everybody to pay the 100% attention in, so that you understand why what is recommended. Typically, when the tax audit is carried out, we are preparing financial statements of our clients, which are in the form of a balance sheet, profit and loss accounts, schedules, and so on. But for clause 44 reporting, will I consider expenditure as per Income Tax Act, which I use for reporting in our ITR forms, typically ITR number 3, and tax audit report in the applicable specified forms? Or will I consider the expenditure as per the GST Act? My humble view is we should consider the information only and only as per the Income Tax records. I will substantiate my reasoning of why do I say my all statements that I make in this particular session, they are derived from to facilitate income tax assessment of a taxpayer. Let us take an example of a single GST registration that a taxpayer will have. But there can be many situations where there are certain transactions under GST law and IT law. They are on a different footings altogether. But first and foremost, this clause reporting we are doing under the Income Tax Act. We are not doing the income tax reporting under the GST law. That is my first stand key. I will follow the income tax compilations. And when I say compilations, it is financial statements in general. That would be my foundation, which I will use for reporting in this particular clauses. Then the next question that comes to my mind, will I consider revenue expenditure or will I consider capital expenditure also for reporting such information in clause 44? In my humble view, only revenue expenditure should be considered. What should be excluded is depreciation allowance, bad debts written off, statutory provisions which are created, deferred tax or income tax provision debited to the profit and loss account. And some people will ask or think, why only revenue expenditure? Why not the capital expenditure? I have a view to say, when we read the provisions of Section 32 of the Income Tax Act, it provides ownership of a capex, which is fixed asset in any form which we know, which is immovable or a movable. It can be partly owned or it can be owned 100%. So proportionate ownership under the income tax law is possible. But have we come across any instances under Section 31 of CGST Act where the tax invoices are issued by the seller to the buyer in a proportion to the ownership? At least I have not come across any such invoices. So I am taking a support from that particular provision to say capital expenditure should not be included. ICI guideline says the capital expenditure should be reported. One can take their independent call. What we are doing, we are not reporting the capital expenditure. We are giving the proper disclosure in the form number 3CA and 3CB appropriately for reporting this. Depreciation also we are excluding. The reason it is an allowance, it's not an expenditure at all. Bad debts written off is also not a technical expenditure. It is a loss arising on account of the non-realization of a dues from the parties to whom we had supplied goods or services. Similarly, provision for gratuity, provision for taxation, and so on. Other thing that comes to our mind, when I'm reporting clause 44 information, will I report expenditure information, which is including input tax credit, which is claimed in the form of inputs, input services, and capital goods? In my humble opinion, we should report the information excluding input tax credit. The reason, I draw my support from Section 145A of the Income Tax Act, which says that if I'm maintaining my books of accounts on account of the exclusive method of account taxes, then I should do the adjustment of a taxes for determining total income under Section 28 of the Income Tax Act. In view of that, since I'm reporting everything from the income tax perspective, again, I come to a conclusion that I will report expenditure excluding ITC while reporting such a data. Next, do I consider the provisions as well as the prepaid expenses in reporting? Again, when I'm following reporting as per the Income Tax Act, if I'm following a cash system of accounting, then the question of provisions and prepaid does not arise. But if I'm following mercantile system of accounting, which is permitted, there are only two types of method of accounting permitted under the Income Tax Act, which is mercantile or cash. Cash is very limited. So all the discussion will be revolve around the mercantile system of accounting. So if I'm following the financial statements which I draw for reporting purpose, then provisions and prepaid expenses has to be suitably considered, because this year if it is a provision, next year it will be reversed and I will be receiving the tax invoices, so that I would be reporting the information either as a B2B supplies, or I will be reporting same as a bill of supply or an exempt supply, depending on the nature of supply. Here next, that comes to our mind, do I need to reconcile with GST or 9 and 9C? In my understanding, if we can reconcile, it is very good. In that case, even our 9 and 9C would be ready by the time we finalize this particular data. So typically today's last date of 9 and 9C is 31st December. But if the data is reconciled, if it is possible, then it is good. Otherwise, it should be reconciled to the reasonable extent. That is my personal view. Here then the next question comes. If I am having a multiple GSTN number, say 38 GSTN numbers, but under income tax, I only have one PAN number. I am filing only one income tax return. I will have only one Form 26AS. I will have only one Form AIS and TIS. So again, that supports my view that I have to go as per the income tax report while filing the details in the clause 44. Do I consider the books of accounts as per the Income Tax Act, or do I consider the books as per the GST Act? I will say primarily we should consider the books of accounts as per the Income Tax Act, which are specified under section 44AA of the Income Tax Act. Either it is a business or a profession, specification is given. And GST also mandates maintenance of the books of accounts under section 35, read with rule 56. But if we recall all the information in the initial stages of the implementation of GST, or even that case service tax or excise, it was always clarified that whatever the books of accounts that are maintained under the income tax law or a corporate law or any other law that are applicable, that would suffice the requirement of maintaining the books of accounts for the purpose of the indirect tax compliance, be it excise, VAT, service tax, or GST. GST has prescribed the documentation, which we will see in the subsequent slide. But here there is one point to be kept in mind. Section 35, which is the governing documentation and records to be maintained under the GST law. We will touch upon section 25 in next slide. Let us understand the interplay between the income tax and GST. Under the Income Tax Act, as I have explained, there are two methods of accounting permitted, mercantile and cash. But when I compare same with the GST law, there is only one method of accounting, mercantile. So again, I say Since it is a mercantile, even for the purpose of the reporting, mercantile system has to be followed. There are no exceptions provided under the GST law, but the exceptions are provided under the income tax law to say that to certain class of taxpayers, cash system is permitted. And again, category of the taxpayers is specified under section 44AA, which classifies the person as category A or category B. But it excludes the people who are maintaining the presumptive system of taxation. Who are adopting to the presumptive system of taxation because they are not required to maintain the books of accounts. So they are not considered for the purpose of this discussion at all. Notified professionals are provided, and various income limits are provided for who are mandatorily required. But when we look at the category B requirement, which says under Rule 6F, which is stable, when the gross receipts exceeds rupees 1.5 lakhs and similar amount for a newly set up profession, books of accounts maintenance is compulsory. Cash book, journal, ledgers, carbon copies of bills issued in excess of rupees 25. Now, though there is no concept of carbon copies of bills anymore, but this is the existing provision of the Act. And where the expenditure is concerned, you need to maintain original bills where the expenditure exceeds rupees 50 rupees. And medical professional will require to maintain the patient register in a particular format as well as the stock register of the medicine. Why did I only write medical? There is a specific reason which I will take up in the next slide. But when I'm comparing section 35, read with Rule 56, which talks about the accounts and other records. But when I correlate with the information that is required to be reported in GSTR 3B, GSTR 9, 9C, especially the e-way bills, all registered taxable persons are required to maintain the production or a manufacturing records, inward supply of goods or services or both, which includes the RCM supplies also, stock of goods, input tax credit availed, which is in the form of inputs, input services and capital goods, output tax payable and paid, and such other particulars as may be prescribed. But till today, nothing has been prescribed under the GST law at all. Many organizations have started maintaining the suppliers master data where they do the classification of the registered or a composition supplier or exempt supplier accordingly. But here, when I look at the section 35, if I put a disclaimer in the tax audit report in form number 3CA and 3CB, saying books of accounts not maintained for the purpose of reporting under clause 44, I am myself is contradicting my tax audit report. There I will say I am maintaining so and so books of accounts, and under for GST I will say books of accounts not maintained. Let us assume, go further, we are very sure कि records not maintained for the purpose of requirement of reporting under clause 44. It exposes our clients to a situation where for the purpose of the GST assessment, best judgment assessment can be carried out, where proper officer can decide the levy of determination of tax payable either on goods or on services or both, subject to the provisions of section 73 and 74, plus read with section 125, which is a general penalty. which is 50,000 rupees per GSTN number, divided into 25,000 SGST and 25,000 CGST. Can we take such a risk in putting such a disclaimer in the tax audit report? In my humble opinion, one should be very, very cautious if such statements are made. I'm parking this issue for the time being. We'll touch upon a little later. But especially in case of the multi-GSTN registration, such books of accounts as prescribed under Section 35 are required to be maintained for each place of business. It can be in the electronic form also. But when we read the rule, it says true and correct manner. So here if we say under income tax, we will say true and correct reporting. But under GST, again, we will have taken different view. How is it possible? We are issuing tax audit report of a person. So you have got to report from that perspective. It is a balanced view from both the laws. Let's touch upon the next aspect. Some of the do the comparative reporting under the income tax as well as the GST law. Under income tax returns, when we file, typically ITR 3 I'm talking about, we are giving the breakup of manufacturing, trading and profit and loss account. We are giving the information about the inventory valuation, and if the ICDS provisions are applicable, we are reporting such information. Quantitative details we are reporting in part A of ITR, and it is mandatory where the tax audit is applicable. So anybody carrying on the activity of goods and supply, such information reporting is mandatory. Plus, we are reporting ITC availed, booked and utilized in clause 27A of Tax Audit Report. There are many people who say, since the word Senbet is used in clause 27A, we don't report in ITC information. That is an independent view, but we report such information in the clause 27A. Again, in clause 35 of the Tax Audit Report, we are reporting the quantitative information. Under the corporate law also, we are reporting the principal items of inventory. And we are giving the proper disclosure in the notes to accounts as well as the CARO as a particular reference of the inventory. But when I compare inventory reporting and ITR, inventory reporting in the Tax Audit Report and inventory reporting in the corporate law, all the information should tally prima facie. Now let's compare same information in GSTR 3B, table 5. We are expected to report the information pertaining to nil, exempted and non-GST inward supplies. What we have observed, most of the people don't report such information at all. Most of the people, hardly maybe 1 to 5% would be reporting. 95% people, this is not reported. Let's look at the GSTR 9. We are reporting the ITC credits information in 6, 7 and 8. In table 15 of part 6, we are reporting accumulated ITC refund if we have claimed in case of the inverted duty structure or exports of goods or services, as the case may be. If we have reported the supplies received from composition taxpayers in table 16 row A, that can also help in reporting. From assessment from the financial year 21-22, HSN reporting is compulsory in table 17 as well as table 18. So anyway, we are going to prepare that particular details. Again, 9C, table 14 reconciliation we are doing. We are giving the nature of expenses. What is ITC claimed and what is eligible for, and then we do the reconciliation vis-a-vis the GSTR 3B and the books of accounts, as the case may be. But look at the total breakup. Total expenditure we will report which will exclude depreciation and statutory provisions that are made or a bad debts written off. Total expenditure is divided into two parts. One is the procurements from the registered entities and procurements from the non-registered entities. That is the first information which they will see. What is the composition of a registered supplies procurement and what is percentage of a non-registered supplies. Again, registered entities information will be divided into three parts. Registered entities, which is typically all of us know is a B2B supply. Composition supplies, where taxpayer will issue bill of supply and he is registered under section 10 of the CGST Act. And third bifurcation is goods and services which are exempt from the levy of GST, even though he is registered as a taxpayer. Registered supplies would be a reasonable information to be derived from either our purchase register or GSTR 2A or GSTR 2B. If we can, most of us would be using the software. So if you can import yearly information, then probably that reasonable information can be derived for the purpose of reporting for this requirements. But follow mercantile, whereas institute guideline says we will go on the payment basis. Why do I don't recommend the payment basis of reporting such a information? The reason is how many reconciliation or taxpayer or as an advisor we will carry out. At least if it is reconciled with the profit and loss account which we have drawn up, we can prepare certain MIS reports where the information, how the information is collated, can be produced for the purpose of the assessment. This is the base on which we have reported such information. But if I go on a payment basis, some invoices pertaining to 21-22 are claimed in the next year. Some invoices pertaining to the previous financial year are claimed in this particular year. Some expenses which are for which the provision is created, but the invoices have been received in the next year. Prepaid expenses incurred in the 21-22 and for the purpose of GST. How many reconciliation a person will do? So in my humble opinion, again, mercantile system of accounting linked to ITR reporting is a best way of doing such a reporting. The next question that comes to our mind, okay, we are reporting total expenditure. Will I report summary information or will I report the detailed information? In my humble opinion, we should report the only summary information in clause 44. Detailed information should form part of our working papers because that can be called at the time of assessment. Though many software provide the options of multiple data fields, but I recommend only one line information to be provided and that would suffice. And to recap, I have created the acronym ECR. Typically when we look over, remember the word ECR, it stands for emergency clearance required. So here emergency is required for reporting in clause 44, but E stands for exempt supplies, C stands for composition supplies, R stands for registered supplies. And anything other than ECR is a non-ECR, which is unregistered supplies. So if we know this particular term, we know exactly what we have to look for. Or we can refer that as an electronic challan cum return reporting or only electronic reporting, the way we want to coin it as. But I have coined the term as ECR. Here, look at the breakup, what we discussed. Total expenditure, we have prepared our financial statements We'll use the formula to derive the total expenditure. We will deduct the depreciation. Capital goods, anyway, we are not reporting because of the reasons that I have stated. You have first round of information ready to be reported in clause 44. We will take up the B2B supplies, for which we must be doing all the reconciliations while filing the GSTR 3B for the claim of input tax credits. Or we can download the yearly information and compile such information. Bill of supplies will be very limited people who are registered because their limit is 1.5 crore and they cannot issue the tax invoices. So basically that invoices are without ITC. So basically if you have a purchase register where you come to know some information because of the filters that can be introduced in the Excel sheet, who are the suppliers who have not charged me GST, that information can be ready. Exempt supply. Supplies which are exempt under notification number of 2017, which notifies services or supplies which are exempt from the levy of GST. Nil rated supplies, which are notifications issued under section 11 or under section 6, and a non-GST supplies, which is schedule 3 supplies, which are neither goods nor services, and they are typically termed as a non-taxable supplies. For this classification, we need to have some knowledge about the GST law. As far as the supplies from unregistered person is concerned, or imports of goods, we can rely on the IceGate reports. Or for an import of services, if you have raised the self-invoices which are reported in GSTR1 and we have claimed the RCM against the import of services, we can rely on that. Or a RCM supplies, which are subject to levy under the provisions, either under 9.3, 9.4, 5.3 or 5.4, as the case may be. But there can be some people who are registered under the provisions of GST, like event management companies, who are taking the sponsorship from us. Sponsorship, recipient has to pay under the RCM, so he would be reporting accordingly. So that information is also available in GSTR 2A. We can derive that is to be reported as a B2B supply, and that should not be considered as a unregistered supplies. Same way, firm of advocates doing services, providing services other than legal services also would be registered under the GST. Same way, GTA suppliers, where the liability is under the reverse charge. So we will report. We are not supposed to do the reconciliation of each and every invoices. We can prepare a suitable remark in observation and remarks and report appropriately. These are the couple of examples of clause 44 reporting where will we report. And from the explanation itself, if it is a B2B supply, we will be reporting under the registered entities clause. Insurance companies are also registered for GST. Telephone provider, service providers are also registered. Internet service providers are also registered, unless until they are operating in an internal, very small cities. Online cloud, electricity companies, printing, stationery, courier. Each supply that we need to see based on the tax invoice that we have received. And if it is a tax invoice, and if our GST number is quoted, that information is captured in GSTR 2A. So deriving such a information can be little comfortable, provided we do little extra exercise. We have to walk extra mile to derive such information. Imports invariably will be unregistered supplies. Imports of services also will be unregistered supplies. Bank charges, again, B2B supply. Loan processing charges on loan is again B2B supplies. Interest on bank loans will be covered under the exempt supplies because it is exempt. Composition supplies will be reported under the composition supplies. Typically, for a construction industry, if a builder is procuring the land and building, which is complete, but if it is a revenue expenditure for him, then depending on the documentation that is issued by the seller, he may report as an exempt supply or he will report as a B2B supply, depending on the documentation. If the seller has issued bill of supply for a Schedule 3, then probably he will report it as a exempt supply. But if he has issued the tax invoice for some reasons, then it will go under the B2B supplies. But here that question which is like most of us are bothered, where do I report staff salaries and the director remuneration? In my opinion, it should be reported as unregistered supplies. But the institute says non-GST supplies, which is Schedule 3 supplies, should not be reported. But for the purpose of the reconciliation with the financial statements, if I match that information and report, it will help in terms of the assessment. There are some people who are of the opinion the staff salaries and the director remuneration being a Schedule 3 supply should be reported as an exempt supply. In my opinion, that is not confirmation. If I look at the breakup required is from the registered entities, whereas the salaried employee and the director are typically not registered for the purpose of the GST. And we are deducting the TDS under section 192(2)(b). So keeping that in mind, in my opinion, it should go as a non-registered supplies. But if anybody wants to take a divergent view, they can take suitably. Similarly, all the revenue expenditure, probably we can tabulate the trial balance and prepare registered and non-registered bifurcation and report it for the purpose of the working. But report only summary. My personal view, only summary information should be provided, not detailed information. Detailed information you reserve. Now look at some of the brain teasers. Will I report inter-branch transfers? When we are doing the consolidation of financial statements of branches or multiple GSTN, we knock off such items when we prepare the profit and loss account. So for the purpose of reporting, inter-branch transfers won't be. But if I'm paying interest on credit card EMI loans, which is the flavor of the season nowadays, credit card agencies do charge GST. So it will come as a B2B supply. Bad debts written off will not come because it is on account of our top line sales, which are not realizable. We have written it off. Provisions I already. Multi-GST in details. That will be a humongous exercise to be done. But it is since we are doing the consolidation of financial statements, so probably we can tally that information because we will be having the individual trial balances of each branches and each branch will have the respective GSTN number. So that information can be derived and it can be a mathematical plus and minuses. There is one provision which I would like to discuss, especially section 37(1). Disallowances, which is under the provisions of the Income Tax Act, which says that if anything is done which is in contravention of any law that is applicable to business enterprise, it will not be considered as deductible expenditure. But here I have one particular point to ask everyone, or a food for thought again. Take the example of a pharma industry. They are giving gifts and freebies to the doctors and the professionals. That is a legal violation. of MCI. So if that expenditure itself is illegal, can we claim input tax credits on such an expenditure? In ITC, in my opinion, under section 16 won't be allowed. But for the purpose of the clause 44 reporting, such expenditure will be reported appropriately based on the B2B. Disallowances under the Income Tax Act, it's altogether a different chapter. But when we are reporting clause 44 information, we will consider whatever is debited in the profit and loss account. It can be partners' remuneration, allowable, non-allowable, interest on partners' capital, allowable, non-allowable, traveling expenses, telephone expenses, entertainment expenses. Disallowances in income tax will not make any change as far as the reporting in clause 44 is concerned. This is my person. Even a prior period expenses would be appropriately treated. Provisions. Lots of questions in the public domain. Audit fees provision is done. So when I'm doing the provision, since I'm following the mercantile system of accounting, I'm following as per the ITR record, I will report it that provisions, but there is no tax invoice received by the client. So in the year in which I have made the provision, it will go as a unregistered supplies. But in the next year, when I'm reporting clause 44 again, such provisions will be reversed. And in the next year's reporting, that is financial year 22-23, it would be reported as B2B supplies and changes will happen accordingly. I would like to say one more food for thought. Is it a one more data mining exercise to be implemented using AI? In my personal view, information that will be watched very, very carefully is the exempt supply that we are reporting under the clause 44 or an unregistered supply. That will be a focal point. The reason is B2B supplies and bill of supplies is already monitored by way of a reporting in the returns. And probably it may be asked during the assessment, but it will not create once you document and show that these are the workings and this is the genuine thing, no issues would be prima facie created under the income tax assessments. Other question that comes to our mind, I have a GSTR 2A for 9 months and GSTR 2B for 3 months. And then the artificial limit of claiming the ITC. What should I follow? But if I stick to my profit and loss account, what I need to do under the GST law doesn't matter. For the purpose of clause 44 reporting, my sincere suggestion to all the participants, please consider only from the income tax perspective. Don't import GST concepts into clause 44 reporting. That will make life easier and comfortable for everybody. Otherwise, all of us will be worried and then we don't know what we will be report. It will create unnecessary stress for all. So my humble suggestion, please follow only profit and loss approach. That is my view. Are we required to verify the registration of each vendor? It's not doesn't come under our preview. It is a taxpayer who has to do it. And probably enough softwares are available to verify such an angle. Another question that comes, if my master data in my systems of the organization is not configured, then how do we verify? Probably we can ask taxpayer to get some extra hands to make the changes in the system, or in future take care And based on whatever the data that is available under the GST, we can configure and give us suitable disclosure in the observation and remarks. But if you have tallied the information correctly in clause 44, in my humble opinion, filing of GSTR 9 and 9C would be almost ready, and it will be comfortable for everybody. Multi-GSTN will be a challenge, but we are used to doing the consolidation of financial statements. So I don't see much of a challenge in this. It is an additional exercise, which I agree. Right now, there is no requirement to disclose such information in normal IT returns. But looking at the change that has been introduced in the explanation 2A to section 911, especially the concept of significant economic presence, which is mandated for the non-residents. And the object of such an amendment is essentially to see what are the economic activities they are carrying out with India or within India, to determine whether it would trigger permanent establishment concept under the income tax provisions. And if that is get triggered, then probably all other compliances that are required to be done by all the taxpayers would apply. Again, another challenge that all of us will face in case of the merger and acquisitions, different GSTN numbers, but once the one company is merged into the another company, the other company's data also would be required to be reported for the purpose of the ITR. Or if the taxpayer has expired during the year, but whom the tax audit is applicable, then also such a reporting is required till the date of his demise. Though all signing of the reports, approval of the audit reports, all will be done by the legal heir, but that is with reference to his affairs from 1st April till the day he's died. Issues arising on account of the cancellation and revocation, everybody is aware, or there can be multiple reasons. Moot question. Looking at the discussions that we did of interplay of income tax vis-a-vis GST, Section 35, Rule 56, and the implications of general penalty and under Section 125, can it be tenably stated as a defense that books of accounts and records have not been maintained, or that records can't be compared? In my humble opinion, we should not venture into the territory of making such a statements that reports cannot be compared. We can say, express the difficulty in maintenance of certain records, but not the major records. That is my personal view. But everybody can take their independent view, but we will not say the records are not maintained, because then I'm contradicting my own tax audit report, and as well as I'm creating the issues in my GST assessments, which can open a Pandora box. With this, this is my food for thought. I started with food for thought. I'm ending with food for thought. I appreciated all of you, and always say, surround yourself with the people who talk about vision and ideas and not people. With this, I hand over my session to the Arupji. Thank you, sir.
Thank you so much, sir. Thank you. I think everybody in the session will agree completely with me that the way that you deliberated and you have shared the knowledge with all of us, I think it has given us a wider vision, and it also shows as to how you handle with so many FAQs. So that's also clear from the deliberations that we have had. So thank you very much for that. And now I'll quickly go to question and answers. So Advocate Jaideep Sonpal ji, yeah. So we'll just take the queries from the chat box and then maybe we'll just come to you. Okay, so first question is whether interest and remuneration to partners are required to be reported.
Yes, it is required to be reported because you are debiting it to your profit and loss account.
Yeah.
So you will classify as unregistered entities because partners may not be registered. But if the partner is registered, but you are paying as an appropriation of profits, so it will go again as an unregistered entity because there is no tax invoice raised under Section 31.
Next question is where to report non-GST supply in clause 44.
Non-GST supply, if it is a B2B invoice, then you can report it under the exempt supply.
Next question is inter-branch purchases not to be included?
It is not to be included, no. Inter-branch transfers is already excluded for the purpose of the consolidation of GST. See, for the purpose of the GST compliances of GST 9 and 9C, it is a supply to a distinct persons and we charge the levy. That's a different thing. But under income tax, inter-branch transfers never appear in your profit and loss account.
Okay, so next is, can you file a revised tax audit report?
Yes, you can. Clause 44 reporting will be mandatory.
For the revised tax audit
Yes,
report.
if you any report that you file from 1st April 22 onwards.
Okay, and Jairamji is requesting to share the PPT. I hope if the learned speaker is okay, then we will share the PPT in the group.
PPT would be shared. That's not.
Yeah. So we've got the consents, we'll be sharing the PPT. Does zero-rated procurements reported under 1.1A?
Yeah. It is specified, no?
Yeah. Okay. How to report imports? Okay. So Abhaji has also replied that imports are under non-registered entities.
See, all the participants are more knowledgeable than me.
No, I think it's wonderful that we have been following the sessions and so the replies have been coming in. So yeah, so I think then there are a lot of appreciation and gratitude for your the time and the effort that you have put in for all of us. Next question is foreign exchange loss and loss on sale of securities. Where do you reflect this?
Foreign exchange loss, typically it will be on account of the two reasons. One is on account of your export supplies. That is maybe on an income side, or it can be on the loss if there is an exchange loss. So there is no supply, so probably that is to be excluded in the expenditure total. So when you take up the profit and loss total account, which is on a debit side, you can exclude the foreign exchange loss.
Right. And so the loss on sale of securities?
Loss on sale of securities. Typically you are doing a buying and selling through brokers. I believe brokers are registered for GST. So yes. Once they are registered with the broker, they must have issued the common contract note, which will indicate their GST number. And once you have debited, so you should report it appropriately. That is my view.
Okay, so I would request Rinavji, if he's here, to take the Q&A session further.
There is one question asked on a direct message to me.
Yeah.
Yes, sir. You can take it up.
Is it required to report when there is no GST audit and where the turnover is less than 10 crore? First of all, let me tell you, 9C filing will be applicable as the turnover exceeds 5 crore. I assume. I don't know the figures, facts and figures. But if the tax audit is applicable, whether you are registered or unregistered, reporting is mandatory. I'll take you the example of a medical professional only. Medical professional is exempt, not registered for under the GST provision because healthcare services are exempt. but he will be having the procurements of medicines which are from registered vendors. So that can, if he is maintaining the records of that sort, he can maintain and report it appropriately. Or if he has not maintained a record, then it will go everything as unregistered supplies. But most of the things like telephone, petrol pump, motor car expenses, petrol pump are also registered under the GST provisions. So if the records are there, probably you can report suitably. That is my view. And for if you are having a 10 crore limit and you are not supposed to do the tax audit, then the clause 44 reporting doesn't apply.
Sir, we have Jaideep Sonpal, Advocate Jaideep from Mumbai.
Okay.
If you allow me, can I unmute him and let him ask the question to make it a bit more interactive? Jaideep,
I hope he does not ask me difficult question.
Let's hope.
Yes.
No,
Jaideep,
it's not difficult. Yeah, I just wanted to know. I mean, most of the ITC taking from 2B, right? So will that be helpful to extract most of the B2B data from there only?
I would prefer to go with the purchase register, or I'll go with the GST at 2A.
In balance, we can, purchase register is there, but B2B data will get from that readily available, and other all will be unregistered. So it will make life easier, I guess.
It is. That is what I said when I was talking about the total expenditure components. I said from where you can derive that information.
Right.
See, it is basically the software. Now everything can be imported in a click of a mouse, maybe 10 minutes, 15 minutes, or a couple of hours.
Only the thing is that composition, like dealers, that is the issue. How we can extract that data.
If that is not maintained, where it will go? It will go as the unregistered supplies, no?
Yes.
See, some decisions have to be taken on a practical basis at the last moment, Right. But for the next year onwards, we can request client to be little vigilant to classify the information accordingly.
Right.
Okay. We have Nilesh Zaveri sir also. If you allow me, I will unmute.
Sir is very, very senior. I am really scared.
Let's have a discussion rather than a query solving thing.
No, sir can ask me anything. No problem. Tell me.
No, Nitin Bhai. See, how I was envisaging that one should always ask the client to give a list of vendors with their PAN or GSTN number, whatever is available. Yeah. And someone should be asked to first check on the GSTN portal wherever the only PAN numbers are there, or the PAN numbers are there, the GSTN numbers are there, but where they are not getting reflected in what you call 2A as ITC. So those numbers will automatically, you ask for those simple invoice from one invoice from such parties, which can help you to bifurcate between composition dealer and unregistered dealer.
Correct, sir.
That could be a very easy and a comfortable way to know and compile such details.
So, sir, that is all will be captured in the MIS and the supplier's master data as maintained by the client,
Very true, but even if it is not maintained, a client asks that he has to put this information and give in an Excel sheet.
Okay,
and it can be thereafter what you call taken up easily.
Correct.
Because this will be useful for you to have a comfort as an auditor to ensure that you have certified information correctly.
Correct.
Sir, we have a question in the chat box whether PF and ESIC contribution is to be reported.
It is a debit to your profit and loss account, so you will go as this, no? And I think PF and ESIC authorities don't have a GST number, to my knowledge.
So the basic question is whether it is to be reported or not.
It should be reported.
Registered.
I'm debiting it to my profit and loss account, so I'm reporting. That is my view.
there is another question which I personally feel it is incomplete, but you can answer if possible. If an SSE is unregistered, then does he need to report in clause 44?
I think
I
I
don't know.
already answered this question, no? If tax is applicable, clause 44 is mandatory. I have given you the example of a doctor.
Correct. So it is mandatory to report.
Doctor, pathology laboratory, hospitals. Hospitals invariably are registered.
Correct. And again, last question we have, which is, I think you already answered, but I'll just take up the question. Is reporting required of this clause if audit is done under section 4480? So I think you just answered that even if it is, in any case, if audit is applicable, it is to be reported. Clause 44.
So basically very simple. All of us should have a turnover of 10 crore. Only bank transactions. So till 10 crore, tax is not applicable. No clause 44. So uninvited guest is not invited anymore.
So I think we are done with the question. There is one more last question. GST paid debited to PNL to be reported or not?
GST paid.
If debited to PNL.
If debited to profit and loss, no, it will come, no?
Yes.
Only exclusion is the income tax provisions and the deferred tax.
Okay. We have questions coming in. VAT is charged on natural gas purchased.
I hope we have time, no? There are no time restrictions, no?
I think last 5 minutes or so.
VAT is charged, that is on a
natural gas purchase. So how to report this transaction?
If that vendor is also registered for GST, but for VAT is out of this on a natural gas which is not included as a supply. You should report it accordingly.
Okay. Okay. So I think we don't have any more questions now, which implies that everyone has understood.
Either everybody has understood everything or they have decided to go for a disclaimer. Either of the options.
We should take it positively, sir. Everyone has understood.
It is, according to me, it is a boon. I tell you, it is really help you if you can compare the information. Our 9 and 9C are ready.
Correct. So yes, maintain 9 and 9C records. Then this clause reporting makes
little easier, comfortable for us.
Yes, it is simpler, comfortable. Correct.
Yeah.
So I think we've had a wonderful session from you. And
thank you.
A thing to note is that this is probably, I was having a discussion with Nitin sir. This is probably his 10th lecture in the last 10 days on the same topic.
Session.
9th session. And yes, he has a 10th session on this Sunday as well.
Yes.
So on the same topic in the last 10 to 15 days, this is his 9th session and 10th to come on next Sunday. So I think he has taken it as a mission to clarify everyone's doubts on clause 44 reporting. No,
the idea is to either clarify or confuse and then use consultancy.
So now, Rinav, I would request, Nishanji to offer a wonderful vote of thanks to sir. Vote of thanks both coming hoga, but still let's do our bit.
Yes,
so over to Nishan bhai.
Yeah. Thanks, Harukji. When it comes to the income tax website, people always say, the website shows the address as 404, address not found. But when it comes to clause 44, I believe Nitinji has provided so many, we have gone into so much of details that we can't say with respect to any expenditure debited to profit and loss account as clause 404 not found. I am happy and privileged to hear him out on this day. As a local host, I also request everyone to join the RRC. It's a first RRC, and I request everyone to let me become your host and allow you to enjoy Pune weather along with some interesting topics. Please join us. It's a request from your local host, Pune. Nishant here. Enjoy, and I request thanks. Thanks a lot to Nitinji for
Thank you.
making your time available to us, and have a wonderful session over here. Thank you.
Thank you, Nishanji, and thank you everyone for joining in.
Thank
Really
you.
a pleasure.
Thank you, everyone.
And thanks to Rinav Bhai for all the backend support, behind the scenes support that is given.
Yes.
So only because of Rinav ji that we enjoyed a seamless session.
Thank you. Thank you.
Thanks to everyone at CGPI. Yeah, and over to Rinav ji for the closure. Yeah.
Sure. We can end the meeting now, sir.
Okay. Thank you.
Thank you, everyone.
Thank you.